Is cryptocurrency a better investment than stocks? The most debated topic in the crypto space is crypto versus stocks. Most investors are nervous about the stock market and are constantly looking for alternative investments such as cryptocurrencies. However, they still need to understand if cryptos are better than stocks. And if you're one of those people who wants to know the answer, then this video is for you. For today's video, exclusive to our crypto clippers, we're going to talk about which is the better investment between crypto and stocks. Now, without further ado, let's get into the video. If you still don't know what kind of investment to get, a diverse portfolio is a safe one. By diversifying an investment portfolio with different kinds of assets such as stocks, bonds, commodities, and real estate risk can be decreased while the chance to see profit increase. There are always exciting opportunities when investing. Even in the 20th century, wildcatters drilled for oil but sometimes didn't find it. In the 1990s, internet stocks were a popular choice. Today, cryptocurrency is even more popular. When deciding between cryptocurrency and stocks, you must weigh the comfort against risk. Investors in digital currencies must live with wild swings in value, while stock traders may experience a dizzying rise and fall. It's important to understand the strengths and weaknesses of each investment option before selecting it for your portfolio. But first, what is cryptocurrency? Cryptocurrency is a new medium of exchange that's been gaining popularity in the past decade. Some people support the idea of crypto as opposed to stocks and conventional forms of currency, while others believe that the unregulated nature of cryptocurrency makes it too risky to support a full-fledged financial system. Cryptocurrencies don't have government backing, so the value has fluctuating prices depending on how much people will spend. It is maintained on a decentralized network of computers. The owner of the crypto must use a password that is not less than 16 characters in length to gain access. Though there's a multitude of cryptocurrencies, Bitcoin is the most used and has about 2/3 of the market cap. Other popular cryptocurrencies are Ethereum, Litecoin, Peercoin, and Namecoin. However, the value of cryptocurrency is often unstable, changing radically in a short amount of time. In the year 2021, the value of Bitcoin ranged from $28,383 to more than $65,000. People believe cryptocurrency is able to protect against inflation. All the Bitcoin that will ever exist are all accounted for, resulting in the restriction of supply. This leads to less inflation because they can't create any more Bitcoins. Now, more businesses are accepting cryptocurrencies as payment, with Square being one example. El Salvador recently became the first country to adopt Bitcoin as legal tender. If we talk about crypto, we also need to talk about blockchain as cryptocurrency relies on blockchain. So, blockchain is a distributed ledger technology that records cryptocurrency transactions and works as a system to track changes that have taken place over time. Blockchain combines cryptography, decentralization, and the connection of different users who share the task of creating an ecosystem in which transactions can be authenticated. Each block is digitally linked to the one before and after it. Therefore, it cannot be corrupted or tampered with. And some say that the true value of cryptocurrency is in its underlying technology, the blockchain. A number of businesses are adopting it to create a safer transaction system and make sure fraud does not occur. Now, with Bitcoin prices reaching more than $60,000 a coin, it may appear to be too expensive to purchase, but some investors have opted for smaller shares of the cryptocurrency. With unregulated entities operating Bitcoin funds, there are many other options for purchasers. Cryptocurrencies first achieved legitimacy as an investment when it was authorized for trade on the stock exchanges. This was in 2021 when brokerage firms were able to start trading cryptocurrencies under the authorization of regulators. The security token related to Bitcoin has been so popular that it attracted a lot of brokers. Thus, if you're considering investing in cryptocurrencies versus stocks, keep in mind that stock conveys ownership of a piece of a company. A company's founder will own the company at its inception. As the company seeks to grow, the founder can sell shares to investors to grow their share of the company while they are still running it. And at some point, the company might want to share some of its stocks and make it open to the general public. This enables the company to raise more money and helps investors get a return on their investment sooner. If a company wants to raise money, it may need to sell more shares if the company is publicly traded. Companies do this to build new facilities, increase production capacity, or hire more employees. It's common for companies who are publicly traded to do this to get capital for expansion. This could also include an initial public offer, IPO. Also, in regards to voting, there are guidelines for it. Owners of stocks can vote on who the board members will be and vote on company policies. Stockholders have little say in how the company goes about its daily business, but if enough stockholders team up, they can have an impact on the direction of the company. When investors buy stock, the company's performance can determine how successful their investment may be. The more sales and profits a company makes, the higher its stock price should rise. Investors can look for other indicators as well, such as hints of better corporate performance to help them estimate whether or not the value of their stock will go up in value. The trade-off is that the investment loses value when the stock prices drop because of poor corporate performance or economic conditions. Then, investors get a return on their investment from dividends. If the company isn't profitable, the directors may stop paying dividends or keep paying low dividends. Generally, established companies with steady income streams pay dividends to investors quarterly. If the company is growing fast, it might not want to pay dividends at the moment, preferring to invest the money back into the company instead.
Crypto and stocks are actually very different. With stocks, you're investing in real companies that have to release information about their financials, such as what they're working on, where their money's being spent, and how much profit they expect to make. With crypto, you're just buying code, and the value of the coin depends on what someone else is willing to pay for it. This is because there isn't much information publicly available as with stocks, and it's much harder to gauge future values. Now let's consider volatility, or in other words, how much of a bumpy ride this is going to be. The stock market's been around for a long time. It was created in 1611 in Amsterdam. The first ever stock traded was the Dutch East India Company. The company had three main missions: to trade, to explore, and to colonize the world. This was certainly big business back in the day. I remember it well. Because the stock market's been around for so long, experts have learned lots over the decades about how to spot and predict trends. Although it's not easy to predict the market, and I still believe time in the market is better than time in the market, there is no denying that some people are able to beat the system. It goes without saying that people that day trade or invest in penny stocks will see a lot of volatility, more than someone who just holds a low-cost index fund like the S&P 500. This is because this index fund allows you to invest in the top 500 companies in the USA in one easy investment, meaning that if one crashes, then the others will make up for it, leading to less movement in the price. Some people might think this is boring, and I can see why, as volatility and therefore the ability to make lots of money fast is certainly very exciting. But that's what I really like about the stock market. There are investments that suit everyone's individual risk tolerance and goals. Cryptocurrency, on the other hand, was born out of the fire of the 2008 financial crisis, so we really don't have a lot of history to look back on. This means that the price movements are highly unpredictable, as most of this is just happening for the first time. Maybe in the future, when we have more data to look back on, we'll be better at predicting the trends, but at the moment, your guess is as good as mine. There's also a lot of pump and dumping in the crypto space. This means scammers can buy lots of a certain coin, then advertise it as a great investment online, pumping up the price. Then all they have to do is sell, aka dump the coin at the peak, and then it will start to crash, causing lots of people to lose money. This is really because of two different things. Firstly, anyone is able to create their own coin with little approval or even regulation. This is the complete opposite to stock. Sometimes this can be great because we've got some really good projects out there, but of course it can open up to scams as well. The second reason is the market cap, which is the collective value of the coins in circulation. This is very small for a lot of new cryptocurrencies. Therefore, it's much easier for aggressive advertising to manipulate the value in the short term. This is a bit like what the Wolf of Wall Street used to do with penny stocks and telephone marketing, but now in the 21st century. So cryptocurrency is clearly much more volatile than stocks. However, that doesn't have to be a bad thing if you pick your investments carefully. as it was a great opportunity to make a lot of money. I actually recently made a video talking about my favourite coins, and I made a profit on every one of them, and I had much better returns than I would have expected from the stock market in a single month. Because ultimately, if it's too hard to invest, then most people aren't going to even bother. The stock market has historically been very hard to access, with only the rich benefiting from it. I didn't come from a wealthy family, which meant if I wanted to invest, I had to find a stockbroker that would handle my trades for me, and it was a very drawn out process of phone calls. However, recently this has changed. With apps such as Public in the USA, you're able to invest and learn at the same time. These types of apps also allow you to buy fractions of a share, which is actually a groundbreaking concept. For example, if you wanted to invest in Apple, you wouldn't have to buy one full share for over $100. You can start by investing as little as $1. Cryptocurrency also used to be very hard to access in the beginning. You'll often hear people wishing they bought Bitcoin in the early years. I know I do. However, it was almost impossible to buy, as the websites that people use today didn't exist. And the ones that did were really untrustworthy, such as Mt. Gox, which started as a trading card game site and quickly became responsible for over 70% of all Bitcoin transactions worldwide between 2013 and 14. But it all ended in bankruptcy because they didn't have the necessary safety measures in place, which left it open to hackers and lawsuits. Recently, Coinbase, one of the biggest apps for buying Bitcoin, has gone public, which means it's on the stock market, and I've actually invested in it. This is a huge step for cryptocurrency, as it legitimizes the entire industry, and it was actually one of the biggest IPOs in history. And I've personally been using it for just under a year, and I find it so easy to buy crypto and then just transfer it into my private wallet. Many stock market experts recommend holding stocks for the long term. This is because it is well known that over time, the US stock market as a whole has increased in value. Let's say you invested $10,000 in an S&P 500 index fund from 1980 to 2018. If you kept your money in the market the entire time, you would now have $708,143. However, if you got scared and for some reason you sold off your investments and you missed just the 5 best days of trading, you'd only have $458,476. And missing the 10 best days would have wiped you down to $341,484. This shows that although the stock market may dip in the short term, it always seems to have the ability to recover given enough time.
With all that, you might be more confused about where to invest. So here are the differences between stock and crypto that might help you in deciding where to invest. All investments carry some risk. The risk between bitcoins or any other crypto and stocks need to be weighed in order to decide on the best assets for your portfolio. While with stocks, there are risks involved as well. Investments face the risk of shrinking and of the dividends being cut. These are risks that are common to many investments. However, there are still people who can predict the future to a certain degree. For example, some people can predict where stocks might go. However, cryptocurrencies are constantly shifting based on the demand of buyers and sellers. They have no predictors as the stock market does. There is an infinite number of cryptos, all with a level of speculation that is entirely based on what people are willing to pay for them. Despite the inherent risk, cryptocurrencies are subject to huge gains, so even if they carry a lot of risk, they can still be more profitable than stocks. Another difference between the two is their history. You can't predict the future by looking at the past, but one of the best ways to see the difference between cryptocurrency and the stock market is to look at investments. In 2015, the price of Bitcoin fluctuated between $200 and $500. Nonetheless, in December 2017, the price rose significantly, reaching as high as $19,891. Then, Bitcoin dropped below $3,500 in December 2018. Since March of 2020, it has ranged between $3,858 and $9,704. Unlike cryptocurrency, stock growth has been stable since 2018. The S&P 500 index was $2,000 in 2015, with ups and downs experienced throughout the years. The S&P price stands at $3,100 in 2020. As you can see, it's hard for cryptocurrencies to keep a consistent value. The value of these digital assets always changes and is often a lot higher or lower than the recent price. This high volatility happens because there's no natural way to measure cryptocurrency prices in the same way that you can with other goods and currencies. the price of stocks has been on a steady incline, while the price of Bitcoin has fluctuated more. Stocks have thus demonstrated their ability to garner long-term support. Still, the instability of cryptocurrencies is a positive because investors have better opportunities to make higher ROI. The next one is concerning fraud. Stocks in the market are highly regulated with rigorous reviews to ensure each stock is both reputable and safe to buy. So, it's very unlikely your stocks will ever be fraudulent, which means you can invest with ease. On the other hand, cryptocurrency investments are prone to fraud because it's a decentralized and unregulated market. There have been many scams involving crypto exchanges, trades, and mining, reported with investors losing thousands of dollars. Though, this does not mean that you shouldn't invest in cryptocurrency. As long as you take the necessary steps to protect your cryptocurrency, like by using a secure wallet, there's no reason why you should be worried about it getting stolen. Privacy is another element that differentiates the stock market versus cryptocurrency. The stock market is less private than cryptocurrency. With stocks, it's clear to see who the owning party is, and there is evidence of this ownership on the blockchain. It's very easy for parties involved in a transaction to track and find out the details of the check, either a governmental authority or a private individual. A public ledger of cryptocurrency transactions can be viewed, but the personal details behind them are not. If you don't want specific people to know about your payments, this system will keep you anonymous. Stock trading is different from the trading of cryptocurrencies. Stocks are highly regulated and there is paperwork involved that takes a lot of time and effort to do. You must provide a lot of paperwork to start trading on the stock market, while crypto markets only require an account sign-up and a few clicks. You don't need to use intermediaries such as brokers, and there is no need for any declarations. This saves you time and money while giving you the chance to make more profit. If you want to know the difference between crypto markets and stock markets, it's important to know who is a good fit for stocks. Stocks are appropriate for your portfolio. Stocks are stable and hold potential for long-term growth. Even if the stocks have short-term volatility, most companies will exist in the future. This guarantees stability. Here are some of the reasons why you should invest in stocks. With inflation, the money in your drawer or bank account will lose its value with time. In 5 years, that $10,000 saved today will not be worth $10,000. Investing in stocks can help you maximize your potential. When you make an investment, the value of your stocks will not diminish. Your bank account will continue to make dividends for ages. Also, investing in stocks will give you plenty of money later on to live off of when you retire. Investing in stocks is a great way to save for the future. Stocks, especially dividend stocks, give you a real hard cash on a regular basis. You may lose your job or find that your contract ends at the end of the year, but before you get another opportunity, you will have something to pay your bills on time. And when you buy stocks, you become a part owner of the company. If you want to purchase shares in a company that you love, consider buying stocks because then it is like owning a piece of the company. If you want to store your wealth in something other than government-issued flat currency, cryptocurrency may be for you. Although cryptocurrency is risky, it can also be rewarding. There are also many reasons why you should invest in Bitcoin and other cryptocurrencies. The main difference between crypto and stocks is that the former offer a higher guaranteed return than do the latter. Stock values in the United States can be anywhere between 15 to 20%, while cryptocurrencies such as Bitcoin change their value drastically over short periods. With the right strategies, you can make admirable profits from digital coins. Today, wealthy investors are expecting a stock market crash within the next few years. Some people think that it might be safer to invest in cryptocurrency instead of all the traditional investment solutions. The world is rapidly moving towards trying to make all transactions public, which makes cryptocurrencies in high demand. Traditionally, trading in stocks was complicated, time-consuming, and difficult. However, cryptocurrency trading is easy to get started with and doesn't require rigorous steps. You can trade without effort because all you need to do is create an account, get a wallet, and start trading your assets. As you know, you can buy and sell cryptocurrencies quickly, meaning you have high liquidity, and in crypto trading, it's a huge field and one where there are many diverse tools available. Allow technological trade platforms to help you arm yourself with the varied strategies that can make your trading run smoother. These strategies permit automated trading at a specified selling price. The difference between cryptocurrency and stocks is clear. We can see that cryptocurrencies are more volatile and riskier than stocks. However, this doesn't mean that stocks aren't risky, and investing is not an either-or choice. It pays to invest in various financial models that balance risk with reward. Likewise, it's not a matter of whether one chooses cryptocurrency or stocks. Both are perfectly viable options as long as you can handle the inherent risk. However, while both offer profits, crypto provides a greater return on investment with more liquidity. There you have our crypto cliff video for today. So which one are you gonna invest in first? Or are you going to choose both? Let us know in the comments below. Don't forget to subscribe to our channel, click the notification bell, and like this video. If you think that we have delivered value, please share this video with one person. Just one share is enough for you to show your appreciation for the commitment and hard work we all put together in creating this video that teaches and helps you on your mission of building your own fortune. And you don't know that one share could go a long way. And keep in mind that no matter how many times you're gonna watch this video, you won't see any results unless you take action. Goodbye and see you at the next one.